Hello and welcome. This is the Carbon Watchdog podcast. Abundance Investments is a crowdfunding platform that lets people finance the energy transition. If you've got a little money and you want to make it do good and earn something back, then listen on. Abundance Investments MD, Bruce Davis, is a fount of knowledge about the renewable energy industry. And I managed to get an hour of his time and a ton of fascinating info about investing for a climate-friendly future. Great. Okay, so my name is Adam Hardy, and this is the Carbon Watchdog podcast. And to all the listeners out there who are expecting more regular output, I'm sorry about that, but I've been really snowed under with stuff for the Charities Commission, trying to do the red tape to get our charity application, our charitable status through. So with the Carbon Watchdog podcast, it's all free, but if you want to support me, then you can go onto the website and there'll be a link there to Patreon, which you can find. And I would be immensely grateful for any contributions. So on today's podcast, I have Bruce Davis, who is one of the managing directors of Abundance Investments. And I've written an article on Abundance Investments on the website. And if you haven't read that, then a very short rundown is that Abundance Investments offer long-term interest-bearing investments for retail investors to put very small amounts up to fairly substantial amounts into renewable energy and all sorts of green investments that offer a great opportunity to get involved on a small scale, on a retail basis. So essentially, that's Bruce's job, really, to say all of this kind of stuff. So I'll leave it at that. But he's here with me now, and I'm just going to click the view so that I'm recording both of us at the same time. Okay, there you go. So thank you very much for agreeing to be on the podcast, Bruce.
Thanks very much for having me. Yeah, good to be here.
And I've lined up a few questions, and hopefully they'll provide some sort of rhythm for the podcast as it goes. And the first one is essentially what I touched on earlier. You, on Abundance Investments, are offering what I have invested in personally is the renewable energy stuff, and there's a new offering came out to provide funding for car charging in, was it Manchester or Birmingham?
Yeah, Manchester. Yeah,
Greater Manchester. But you actually have around about 40 or 45 investment opportunities or bonds from companies out there, companies and councils out there. Can you fill me in quickly on what other sectors do you cover? It's not just renewable energy, is it?
Not anymore. So I guess, when we started 10 years ago, the idea of investing directly into something in this way was so new that it hadn't been, the regulator didn't really know what to do with it. And we had to work quite hard with the regulator to get permission to do it effectively, to create crowdfunding. And we started out with seeing a very clear need amongst those people who were developing local scale, I would say, wind farms, and also into solar and other areas of renewable energy. So things were at a scale where the investment needed was in the millions, but the low millions per project. And working with banks and other types of financing companies was not easy. In particular, they, at that point 10 years ago, hadn't sort of woken up to their responsibilities in terms of climate change, and were much more focused on recovering from the crisis and or lending to property. So
the credit crunch.
Yeah, basically that forced a lot of banks away from lending to businesses. And then I think the other bit is, since then though, the sort of green economy has developed. So I think there's been a lot of work done to green the electricity supply of the UK, and we can see the success of that over the weekend. I think it was a record for renewable energy on the grid. And some of that has come, I think, through the development of the sort of on land infrastructure, but a big chunk of that has come from offshore. But I think what we've seen from a crowdfunding point of view is then new sectors coming in, like the sort of nuts and bolts, if you like, of green infrastructure. So we've looked at sort of the tidal industry in quite a lot of detail. We've been quite big backers of tidal power. That's particularly obviously focused in Scotland. We've been looking at different forms of, if you like, circular economy investing. So that's where the equation from a carbon perspective is often harder to work through, and often those technologies are sort of stepping stones towards an economy that is effectively net zero, and often dealing with difficult problems we don't want to think about. Honest, like waste, that is one area we've looked at, and that tends to be, if I'm honest, more controversial with some of our investors, because some people will not look at, say, energy from waste on principle. Yeah, so I think those are all areas. I think what we're seeing now is more which is around, such as the EV charging, more which is around the enabling infrastructure, the enabling system for people to make their consumer choices. We're seeing the same in food production too. We're hoping that in the next sort of 3 months we'll have a couple new investments in that zone, which will be a departure again. But I think the core area that we used to have of solar investing and wind investing has really moved onto a scale and a kind of time frame which doesn't really work for crowdfunding. So it's not that the investments aren't there; we're just perhaps not the most suitable mode of financing for them.
Well, they're not long term enough for.
Well, no, they are long term, but they are relatively low return. Now, whilst we've done lower risk, lower returning products with, you mentioned the council bonds, the municipal bonds. The majority of our investors actually want to invest direct into companies and take on private company return and risk profiles, as we had with the Duna. And those just aren't the case for, say, a solar development now. I think you'd be lucky to see on a good solar development a 3 to 4% return on your money over probably 20-25 years, and that may not be as interesting to people who are, I think, probably motivated by two things. There's a return question which you come back to, but the other one is the level to which they're really creating impact and making change. And I think with the tidal investments, that's been a really good example where I think if we hadn't been there, the UK wouldn't have a tidal industry to speak of, because we stepped in there and helped build those companies and provide them with financing, which I think otherwise they would have struggled to get it from a commercial basis. But I think it was a lot for a bank to get their head around in terms of a new technology and a new sector, and literally a lot of moving parts.
That's excellent. I mean, that's really fascinating. Tidal power is just, I'm a bit geeky with this sort of technical stuff. Tidal power is really, really interesting. And I remember about 15 years ago talking to a guy who'd invented, in his PhD, he'd invented some tidal power machinery or technology. And he said that he just couldn't get anywhere to trial it because the whole of the coastline of England is owned by the Crown, and the Crown didn't want to have anything to do with it. They were just like, no, go away, foolish boy. And so it's fantastic that you managed to help launch that breakthrough.
Well, we worked, the two big areas, it's Orkney really is the big tidal kind of experimental zone, if you want it to call it that, and then on the north of Scotland. So there happen to be quite strong tides up there, and that is where the undersea turbine technology, which Atlantis, CIMEC are producing, and the floating turbine technology, which Orbital are developing, that's where those are being tested, and they've obviously got potential to be used elsewhere. Atlantis have just installed a new turbine in Japan, and they're also working with the French government to put their turbines into some of the strong tides you get around the Normandy coast. So it is, but the UK is, I think, globally I get these figures right, we're 9% of the global tidal energy flows around our island, which is huge.
Right. And how much, so imagine at the turn of the century and in the year 2100, how much do you think tidal power would make up of the whole renewable energy mix?
I think that depends on offshore wind. So I think tidal is a predictable resource to the minute. It's also more efficient in terms of the scale of turbine that you need, because water is more dense. So the turbines don't have to turn as fast, and they don't have to be as big,
right,
to get the same energy output. So I think, the majority of our renewable power is going to be from offshore wind for sure, because it's reached a scale now and a cost competitiveness, which I think is quite hard to match even with solar.
yeah,
But I think the tidal is still at that stage where they haven't moved down the cost curve as offshore wind did. Well, I think you'd have to wind back the clock 10 years when offshore wind was seen as quite expensive.
right,
And they made a concerted effort over the next decade to reduce costs. Tidal is about to follow that same track. If it's successful, then you'll see tidal being used, I think, where you need that predictable supply. And also, I think, in things like the production of green hydrogen and things like that. So, that's in particular where it'd be used. And then there's also the challenge, as was just illustrated the news today, where the French were threatening to turn off Jersey's power over fishing rights.
oh right, I didn't see that.
Yeah, the interconnect to Jersey from France. Do islands push for things like tidal energy to become energy independent as well as green in terms of the way they're set up? Because a lot of islands, they rely on diesel power and things like that.
Yeah, so it's not so tidal is it going to grow out of this sort of niche area that it occupies at the moment, because it really is kind of really small and people don't really think about tidal much.
No, it will grow if it can reduce its costs.
Mm-hmm.
And then I think the other bit is the need on the other side. How low that cost needs to come will depend on the value that effectively sort of battery type services or balancing type services provide on the grid. So right. Because I think there's two types of tidal. You've got tidal stream, where you've got the predictability of the moon driving when you will be producing energy. And then you've got the tidal lagoon technologies, which are really there to provide power when wind and solar are not. We had a good wind weekend. We're going to have a poor end to the wind week. These is where you need a mix of energy technologies available. In particular, if depending on your views on nuclear power, but at just a purely economic perspective, nuclear power at the moment is finding it hard to hit those costs.
Right.
And so
they always bang on about their base load, don't they? Oh, nuclear power is just brilliant for base load.
And what we're seeing, if we're getting 60% swings in renewable production, base load isn't really a thing anymore. It's about the grid and balancing the grid. There was a period when base load stopped being used by government as a tool, and it came back again. So there is a need to have consistent power for certain types of services. But I think on the other side of it is, if you have a nuclear power station, let's say one that's producing 3.2 gigawatts, as the new one in Somerset will be doing, you need to offset that coming off the grid. You can't just rely on that and have no redundancy.
Right.
And nuclear stations come offline, not as often, but they do as the weather changes, but they do come offline.
So that's why they're probably arguing, the pro-nuclear lobby will probably argue that they need more than just one then.
We need two of them, yes.
Right. Okay, that makes sense.
I think it comes back to, when we're talking about net zero, it's as the discussions have been this week, it's a slippery concept. And it's possible to say things about net zero that you have to then verify. which I guess is what someone like yourself would do. Ask the question, ask the different question. And when someone says that they're net zero, you really do need to understand their definition of it, because there's no fixed definition.
Right.
And I think that I've seen from all sides, actually, I'm not going to say one lobby or the other, because each technology is lobbying hard for attention and for money and for support and so on. Is you see different arguments at different times for why they are a good idea.
Yeah.
And I think the fundamental thing is, as an investor, if I'm just using my money, my small amount of money in my pension or my ISA, to say, right, I want to make some change here, is, am I backing a range of things that are happening, and are they all going in the same sort of direction? That's about as good as I think you can get at the moment.
Right. Yeah. Well, that makes sense. I mean, going back to people as well, though, you mentioned earlier that you're thinking that now, was it wind is not sort of producing enough return to interest people, and that really kind of shocks me a bit, because I'd have thought that, I was going to get onto sort of the risk of it later, but one of the things that you say on your website is that it's best to have a several investments because of the risk of one of them going under.
Yes.
And so I'd have thought that if you're going to diversify, you're going to have, these low interest bonds from, say, a wind farm or a solar farm would be offering not very much, but probably more than my interest-bearing 90-day access account at the co-op.
Yes.
And so that's, I would have thought, well, at least they're still interesting to me. But it sounds like you're getting people coming along who are sort of,
well, it's
like demanding stock market returns or something.
Some of them are. I think it depends on the amount of money you need to raise. And I think the other issue is with the wind and solar stuff is we would be a portion of the capital required. So a 50 megawatt solar farm, which is the sort of average size now being developed, that's 50 million pounds. We don't have the capability of raising that in a short period of time from individuals. And because we don't have that money ready there and then, the way those businesses get financed, we can't participate as easily in those sort of deals. There will be changes coming. I mean, we're looking at deals in Wales and in Scotland where it's a requirement that the local community and people generally can invest in them. So there's an element of the capital is put to one side for investors. But I think there's two things to bear in mind. The first one is that the returns that you're getting on some of these projects does reflect the sort of the value of those projects. And there is a lot of money looking to invest into solar and wind at the moment. And that pushes up the price of the assets themselves. So a bit like property prices, when there's more money being chasing around, that's what it isn't. Supply and demand is not really the issue here. It's actually the amount of money looking to invest.
And in terms of your platform, if the price goes up, that essentially translates into the interest rate that's offered going down, right?
Well, effectively, we don't invest obviously in the equity with the shares side of it, but the amount of debt that gets raised and the return on that debt goes down if there are lots of people looking for that type of bond.
Yeah.
And so our ability, if you like, to command a price in the market is reduced because someone else will take a lower return. And a commercial venture who will want to reduce its cost of debt.
So you think that you were mentioning that you're too small to be able to bring together the capital that's required to fund a whole project, a whole renewables project on its own.
For a 50 megawatt, yeah.
Is that something that you might grow into? Is that something that Abundance could do?
Eventually, I would imagine. But we would, at the moment, we're quite comfortably able to raise between 3 and 7 million from
over
the investor base that we have.
Over a month or so, is it?
Up to sort of three or 4 months usually.
Right.
And Iduna, the one that came through the platform recently for the EV charging, that was unusual that it did the 4 million in a week. Now, there's a question whether we would maintain that pace and do a larger amount, but above £7.5 million, we're required to do another level of, essentially not bureaucracy, but due diligence in terms of producing a prospectus. And that starts to look and feel a lot more like the sorts of companies and investments you can buy on the stock market, not in terms of equities, but bonds. So it's a lot more costly to do those types of projects. And whilst we have the capability to do that from a regulatory perspective, we're not seeing that our money would be sort of competitive with the money that's coming from essentially the City of London there.
Right.
So I think as I said, there will be projects coming through where a large-scale solar farm is required to get, £5 million from smaller investors as part of their planning permission.
Okay. Yeah.
And hopefully we'll participate there. And the returns on that particular portion of the debt might be a little bit higher because they're not what's called when you're financing something quite big like that, you'll have different bits of capital. They
Sure.
call it a stack. And you'll have the equity, the shares of the company, and then you'll have different bits of borrowing that they're making.
Yeah.
And the senior debt, which is usually coming from a bank, is the lowest risk. It has the claim over the project, and a bit like when you're borrowing money to buy a house, your bank owns your house effectively.
Okay.
But there are other bits which are higher risk, therefore higher return, that you can also lend. And those are the bits where I think we would probably be able to participate.
I get the impression that one possible barrier to people going onto abundance and using it is the amount of stuff that you have to read, because you have, essentially you're being forced to read the small print. Everybody goes onto a website and they start using it, say from Apple or Google or something, and you get the terms and conditions pop up, and you just scroll down the bottom and hit okay. I don't know anybody who ever read them, right? But with abundance, what you do is you force people to answer a questionnaire before they can hit buy that proves that they actually read it.
Exactly. And that's important. And it's interesting that the regulators actually asking questions whether they should have additional controls in there at the moment. So when we launched those, we actually did used to enforce that there was a time period before you could press invest now. So if you saw the offer document, we wouldn't let you just press invest now. We made you go and have a cup of tea and read it. But now, yes, we have the test, and that's a regulatory requirement for crowdfunding. And what it does is it checks that as an investor, you've understood that you're taking a risk, essentially.
Right.
And if you fail that test, you won't be allowed to move forward because you haven't understood that you're making an investment, essentially.
I see.
So, and that's important because, as you said, we've done 6 projects. We've had 2 or 3 where we've had issues, one where it's gone wrong, if you see what I mean, sufficiently that people have come away with a loss. And in that situation, that you might expect there to be, if there's 1,500 investors, to expect a lot of complaints about that. I mean, we see very few complaints, single-digit numbers.
Yeah.
Because we've made sure people understood what they were doing. And if you know that you signed something and said, yes, I know I'm taking a risk, I know there's a risk on my capital. If the worst happens, something goes wrong with the project, then you understand that's what you were getting into. And we've seen some pretty high profile things recently where, frankly, the controls weren't there. And so people have complained. And that isn't to do with abundance. That's to do with other areas of crowdfunding or unregulated investments that really shouldn't be out there in the market at all, because they don't take the time to sort of make investors read what they're doing. So I agree. There's a bit of a halt there that's designed to be there, and is a requirement now. But I think we do know that some people don't want to go through, for every single investment they're going to make, they don't want to go through an offer doc. So we are looking at whether we can offer a product which is essentially giving you a chance with some of your money to sort of invest in lots of companies all in one go, so through a fund.
Oh yeah, that would be perfect.
So that's a solution for people who don't want to get so involved in the individual investments. They'll still be able to do the crowdfunding side of it, but we know that some people are put off by, they just don't have the time, or maybe they don't have the motivation yet to really get involved in the ins and outs of electric vehicle charging or whatever else it is that we're describing. But some, they absolutely want to, they really like the updates they get from the tidal industry people.
Yeah.
They like to see the machines going in the water and see their returns as well. So it is horses for courses. We're expecting that some people just want to know that they've done something good with their money, but they don't necessarily, as you say, want to go through the whole process of what is this, what am I going to do specifically, and that's a different type of investment.
Yeah, I think it's essentially it's risk, isn't it? You can invest quite simply in the stock market. You have to sign lots of small print when you open your account with a stockbroking company, and whether you understand that or whether it's even written in a way that makes sense is a good question.
Well,
but you just
what's interesting is that they're consulting on some changes that might affect that too. So some of the good things that have happened in crowdfunding is we found out ways of using online tools to slow people down a bit.
Yeah,
I think, if you saw the things, what they called the Robin Hood investing and GameStop and all those sorts of things.
Yeah.
People getting carried away on sentiment, or Bitcoin, is a classic example of that. And not taking the time to look at the fundamentals of what is really going on, or even understanding them.
Right.
So I think when we look at a project, yes, if we're talking about renewable energy generation, you've got the inputs and outputs. They're relatively easy to get your head around. Slightly harder with electric vehicle charging. There's more moving parts. Different again when we looked at green social housing and those type of investments. So we want people to understand these are all different types of risk, and they should spread their money, as you say. The other side of it, though, is we also want people to engage. We want people to think about where their money is going a little bit more, and not just assume that the sort of passive option will necessarily get you where you want to be. And I think that's the trade-off here, that when we look at what's now being termed as ESG investing, or environmental social governance type investing, a bit like net zero, that's a pretty broad definition there. And for some people that includes palm oil,
Right.
or investment in coal.
Well, I guess that investment in coal, now you're really pushing the envelope.
Well, because
in what ways
they'll say, well, we're influencing that company and trying to get them to change.
Okay, right. Okay, you don't mean abundance, you mean just ESG in general. Yeah.
No, I'm talking generally about ESG.
Yeah. Yeah, I see what you mean.
So I think, no, we wouldn't invest in coal.
I think, one thing with the EV car charging, I went in there and I read all the stuff and I thought, yeah, well, I think I understand, or at least knowing myself and knowing my ability to skip things and miss things out and just be a bit woolly about it. I kind of thought, well, okay, I know as much as I think I'm going to get out of this. And after investing, I then went off and I think it was on Twitter, I saw somebody in Wandsworth, a councillor in Wandsworth, electioneering and going on about how they've installed so many EV charging points around their borough. And then they're a Conservative councillor, and then they were immediately lambasted by the opposing Labour people coming from the opposite direction, saying, this is a bunch of rubbish. You charge so much that nobody uses them. It's a complete waste of money. And I thought, oh God, I don't even know how much these guys are going to charge for that,
Well, yeah, and that's an interesting one, because as I said, this was a private company that they've got the contract from Transport for Greater Manchester to deliver a number of chargers for them. Well, so for the area, not for them. And they were taking over a number of chargers that were already there, which the council had planned to switch on to having to pay for them. They were free up until now. But it wasn't the fact that Iduna were taking them over that they're now charging, but that's the reality now. You're now having to pay to fill up your car with electricity. And yes, they will have to get the pricing right. So there's a question then of whether you think that the best people to sort of deliver that are private companies working in partnership with local councils or not.
Yeah.
Or councils themselves. And I think what will happen is you're going to get a mix of things. So it's all going to come down to location, and then the type of charger that you can put in that location. And so what Iduna are offering is this sort of convenient charging during the day for people who can't easily charge at home because they don't have a driveway, or they don't park near their house. And also the access to sort of public spaces such as shopping centres, gyms, and so on, which Transport for Greater Manchester have that access.
Right.
So yes, there will be different charges for different, if you're charging your car in an emergency kind of way on the motorway, I'm sure you'll get charged quite a lot for the electricity in the future, as much as you do now for your petrol.
Yeah. Well, I mean, that's, and sandwiches and everything. It's just
and everything else expensive. Yeah. Or they will subsidize it with you buying sandwiches.
Good one.
Yeah. So I will see what business models come out. And I think, yes, we had to take a view that Iduna are experienced guys. They've worked in this area for a long time and they had a plan. And I think that's what you're putting your money behind. And the question then is, well, it's the chicken and egg. Building more chargers will reduce the number one reason why people don't buy an electric car, which is range anxiety. And
right.
So you kind of have a positive feedback, you would hope, that seeing more chargers around means more people buy electric vehicles, which means more people use your chargers. And that, I think, is what the whole industry is sort of building itself on. Yeah. So we will see how that develops. But I think the key thing is that we see, you're buying small amounts of chargers at a time, not making a big bet, as some of them are, on thousands being rolled out in a wave, if you like. We would rather see that as the technology develops and as people's understanding develops, that you adapt your strategy and change what you're offering.
Yeah.
Which,
I mean,
that's good business sense in my view, rather than anything to do with green investing. Yeah,
you don't want to have 10,000 EV charging units out there with just the one old connector that suddenly becomes redundant.
Well, yeah, hopefully not connectors, but it's definitely about the time that it takes.
Yeah.
The rapid charge, there's different words being used. There's fast chargers, rapid chargers, and all these different types of terminologies. But they're suitable for different places, depending on how long people are going to be there. So I guess, I mean, from an investor perspective, you're having to therefore understand a little bit about what do we think consumer behavior is doing. You have to understand a little bit about the future of the EV market, which is, from 2030 will be 100% of new cars. So it's those things all need to be taken into account when you're thinking about the risk.
To a certain extent, when I'm thinking about the risk as an investor, I kind of get far enough, and then I'm like, oh, I can't handle any more of this small print stuff.
Right.
Abundance really wouldn't put something that was going to fall apart onto their platform, would they? And just click buy. So to a certain extent, there's reliance on abundance investments to put good quality stuff up there.
So you can rely on us to have done the due diligence. What does that mean? Due diligence is us asking them the questions, right? So if they're saying something like, we think we can make this much revenue from selling electricity, we will ask them, well, what is that assumption based on? And we'll look for a conservative view of what they think their prospects are, because we are financing them with debt. We're not the equity. We're not going to get all the other upsides of being a shareholder. We want to know that the money will get repaid. And there's always risk, because otherwise you wouldn't get that return. But that's what we look at. I think the other side is, yes, we've also looked at this and thought about it quite deeply about well, how does this fit with our overall mission, which is about accelerating net zero? Now, not all of our investments are about that, but the majority of them are. And I think people also look to us to make sure that we've thought about the carbon, both the impact, but also how does this accelerate the change we need to make? Because assuming that aiming for 2050 and getting everything done in 2049 doesn't work.
No.
It is about doing as much as you can as early as you can. So we think about these investments in those terms as well. And so you might choose Iduna over another EV charging company because you think that basically their approach is going to create change faster. And that might come with a risk, but the risk of not achieving the goal is greater in a way. So it's that's some of the trade-offs, I think. So it's at the level of investment risk, I think what we hope is that people can read our documents and understand to the point where they're prepared to put their money in or not, what risk it is they're actually taking, and that there is a risk. The second piece is, as you say, that you kind of understand a little bit of why we think this is a medium risk or a low risk investment or a high risk investment.
Right.
And that will come down to what you've identified. We can't predict the future in terms of the take up of electric vehicles, whether it's going to be 2025 when the tipping point comes or later, we don't know. But we can give you the probability that we think that's the case. And that's what we present to investors. And then you make a decision based on that. But I wouldn't want people to think that we do help the companies that have problems, and our investors help those companies. We've had a couple where there's been real and significant issues working with the energy regulator, particularly if you're working in the biomass sector.
Okay.
And our investors have backed those companies and supported them. They've given them payment holidays, things like that, to get them through those difficult points, because they understand the motivation of those individuals is to try and do the right thing. And so it isn't a simple case of, oh, well, I can't make my payments this month, therefore it's all over. If there's a problem, we will try and fix it. And Abundance get involved, and we support personally with our people, our expertise. But we also work with the investors to say, right, this is where they're at, this is what they're trying to achieve. And this, and if people are kind of in agreement, then maybe we look at the terms of the investment as well. But everything through that is sort of done democratically, so you vote on it, essentially.
That's just fantastic that it has a democratic basis. It's sort of it's
not so different from being a shareholder in a way. In a way, you've got more power because you're a creditor.
Right. Yes, I was going to contrast it with shareholding, which is more or less seen as shares are just commodities. You never really have that much to do with them unless you're big enough to be able to go to an AGM and stand up and put something to the vote and get other people to back you, like in these divestment campaigns who are having quite some success at the moment. But what I was saying is that what impresses me is that the democratic, it's local people, or not local people, but citizens like me and you, I suppose, to a certain extent, get the opportunity to be involved at that level. And that's really, I think that's really quite something.
It is very real, if you say. So although we're an online business and we use illustrations to show the projects because often they're not built yet, the actual business of doing it, you get to understand what's going on. And I think some of our investors have been with us for 10 years. They've been through the ups and downs of the renewables industry for the last 10 years, which have definitely had ups and downs. A lot of it driven by external factors like policy and changes in policy and so on. And so, what we can see going forward is, I think we want people to be able to diversify as quickly as possible. So when we started out, probably 1% of my investors used my secondary market. So we have a marketplace where you can buy and sell any of the projects that we've got available, because there's always one or two investors that are looking to get their cash out for whatever reason. Right. And if you joined in 2020, then nearly half of those investors also bought something through our marketplace. So in that 10 years, we've kind of moved from mostly people buying from our what we call the primary market, so when they're raising money, to actually quite a big percentage of people buying little bits of existing projects through the secondary market, through the marketplace.
Yeah, I wanted to get in. I wanted to put some money in there, but I haven't really. I don't trust myself yet because I'm not quite sure. I haven't seen it in action, so to speak.
Well, hopefully, we're just at this point going to implement a change that I think will simplify the process, particularly for a first-time user. At the moment, it works a bit like eBay. So you're basically bidding for debentures that other people own already.
Right. Well, that's the main reason why I didn't want to do it, because from my experience on eBay is that when you have an auction, people tend to overbid.
Right.
People, especially if it's a Sunday afternoon when everybody's at their got free time, they will massively overbid the price of a product.
They go pretty consistent pricing. Most of them, when you look at what price you're paying, and this is some of the things we want to show people, is we're giving people more information to see what price it is they're paying and the value they're going to get in terms of return.
Okay.
So if you buy a debenture, you buy it for the amount of capital that's left, plus a little bit, which probably reflects the fact that all debentures are earning interest all the time, but they get paid every 6 months. So if you were buying a debenture that's about to pay out, you should make a consideration for the fact that it's about to give you some money effectively for free.
Yeah. I saw that.
Yeah,
slight complication, but you've got a calculator on the website that lets you do that.
And that's been improved a little bit now with there's a new version coming out, which should make that a whole lot easier to navigate.
Oh wow, okay.
Yeah, so because we've seen that people are shopping there a bit more.
Yeah.
We've gone through a process. We talk to customers there's some quite big users that use it every day, and there's other people that trade now and again. And we talked to everybody and said, right, okay, here are different ways we can make it easier. And based on that, we're going to implement some changes.
Okay. Yeah, that kind of talk about the involvement of people in the situation when it goes badly for the company, and for instance, that energy regulator causing problems. I mean, that's really interesting from a perspective that it offers a different view of finance. Now you're before you did Abundance, you were involved in other sort of groundbreaking finance, I think.
Yeah, I mean, the sort of the cousin of crowdfunding is peer-to-peer lending, and that I was involved in the early days with the team that created Zopa, which is the first peer-to-peer lender. So, and my involvement there was, I don't have so much of that role with Abundance because I'm more on the marketing side, but my role there was I was an anthropologist studying money.
Oh wow! Okay, I see.
And had worked with the team at Egg that then left to form Zopa. So I was doing the research at Egg Bank, as it was then, and we sort of came together, wanted to do something new and different, and the Zopa model came out of that thinking. So I stayed involved as a sort of consultant with Zopa for a little while, but didn't stick around with that. I had my own anthropology research business at that point, studying mainly money, and I worked with a lot of the big banks to try and get them to see money a little bit more like ordinary people see it, rather than the way a bank sees it.
Do you have academic output as well, and papers?
I work with Leeds University, and I'm actually writing we just completed the draft and hopefully the final draft of a book on crowdfunding with a colleague at Leeds, Dr. Mark Davis, who he and I have worked together for 10 years or more on new forms of finance. So he's a sociologist, I'm an anthropologist, and between us we sort of mashed together an interesting perspective on crowdfunding and democratization of finance.
Sorry, I was just making notes on that.
So that book's coming out hopefully in November. We're publishing it through Bristol University Press.
Okay.
But no, I'm not a formal academic. I do teach on money. I teach at business school sometimes, and I've taught on various courses that I've then been contacted by people at those courses who've then gone on to do something interesting. I also work with the Finance Innovation Lab, who periodically kind of have a cohort of people they call fellows, who are trying out new things in finance in lots of different ways, both new types of investing, but also, I don't know, new ways of doing credit checking, things like that, which are all about trying to make finance more inclusive and more socially useful.
Right. I was going to say that you're steeped in finance, but it's not so much the sort of it's a city type of financier. You're more from an academic side. Now that's
and a disruptor. I'm not a fan of some of the traditional elements of the city. I think they build finance almost as an abstract idea away from the society, and I think that finance should be embedded in society as much as possible.
Yeah, that's the next question that I was going to try to segue into was basically, it's about, you know, capitalism and finance and the crises that we have at the moment with everything coming together with from fossil fuels all the way through to things like palm oil and the so it makes me doubt what I'm doing with my money. I've always been a sort of I've always been the type of person who thinks that giving your money to somebody to do something with it, whether it's just paying for a product that you want, you're in effect supporting it. And so I've always tried to avoid buying or investing in or doing anything with my money with things that I don't support, that I fundamentally object to. And so when I look at finance and how am I going to get any type of return on my money? I mean, I'm even sort of going into, I've already assumed, right, that I have to have a return on my money. Whereas, for instance, if you're a Muslim and you believed in Sharia, the Sharia law version of banking, then you wouldn't want to have a return on your money at all.
Well, it's not an interest return. They're okay with risk-based, risk sharing, deriving returns.
Well, you probably know more about it than I do. So
it's interesting. So if you want, the closest we have to a Sharia investment, interesting, is if you invest in one of our early wind turbines, because you get a return that's based on the amount of energy produced, not a fixed interest rate. And in theory, although they're not, because you have to go through a process to be assessed by Iman, that would be compliant with the Sharia law that you're talking about, which is that what is banned is earning interest on your money, not without risk, but just on the money itself. So charging interest for the money as opposed to being a stakeholder in the project. So if you buy a Sharia mortgage, then effectively is the return, and sometimes, if I'm honest, there's a little bit of sort of technical trickery to achieve this. The return is not charging interest. The return is a share of the returns on the property, effectively.
Right.
And when you do that in a business, then Sharia bond has a variable return. It's not fixed, which is what we've done when we did with the original wind turbine. So there was a period when I did consider whether we should go through the process of getting it Sharia, but it takes too long. Basically, was the problem.
Right. Yeah.
But in theory, yes, they are compliant with Sharia law. So but it is exactly what you said. Your money makes a difference in the world. It's not passive. It's not neutral. It's political. And investing is the most political thing you can do with your money, which is counter to the city. This is the culture I think I would be against within the city. The idea that somehow money is neutral, finance is neutral. It just sits there like the broadband, enabling what we want to happen. But what happens on the internet? Well, that's the internet's problem. Right. And in reality, they're not that. Well, without what to put it, they have a hand in shaping what is on that network, and also what those institutions are prepared to do and invest in. And that is shaped by the way we constitute finance and money. Not just your your money, the way you transform it into different forms of capital when you buy it or buy something, or you invest in something, but also how that influences the world around you. And I think that's the bit people underestimate. They think that money is sort of effectively a sort of passive commodity,
Right.
and it's anything but. It's I think there was the book Homo Sapiens. He said it's the sort of the most influential technology that we've probably ever developed for collective purpose. Before we had money, we didn't really have collective purpose.
It is, and it's so difficult to actually see the end result, though, for a lot of things.
Exactly, which is why then on abundance we make it really, really tangible. So it's a kind of process of learning by doing. Because if I talk in that way, I mean, when I've given lectures on this, it's quite hard to make it real for people, particularly students, because they don't have much money.
No.
And although they do owe money, obviously they're part of the financial system, they have student loans. So they tend to approach it through that lens, interestingly.
Well, when you have a student loan, there's a bank making money off it. I think at the end of the day, so you are supporting whichever bank you go to get your student loan from.
Yeah. Well, you're supporting. I mean, they've changed the structure a little bit, but yes, originally, yes, you were basically supporting investment banks who were buying and trading the bonds backed by your loan and your ability to repay it. Particularly in America, that would be the case. It actually, and I think this is a separate conversation, but I think actually you shouldn't think of your student loan as a loan. You should think of it as a form of tax, and only pay it when you need to.
Right. Yeah.
Which is the Martin Lewis view of the world, which I know shakes people, because they're all like, "No, I need to repay my loan. I hate being in debt." And he's saying, "Don't repay it." Martin
Lewis, the independent
money saving expert. Yes.
Oh, money saving expert. Okay.
Yeah. So he will say, "Don't repay it. It's not designed to be repaid, unless you can afford to sort of you make the full payments over the life." And so, because we have this funny idea about debt and savings, for example, we think savings are good and debt is bad, even though savings themselves are just a form of lending. So these are the things where I think the categories that we use, the words we use, they're all loaded in meaning and morality. So from where you're sitting, thinking I want to be active with my money, what we sort of, and this is the thing Mark and I explore in the book, it's actually a pretty old phenomenon that crowdfunding was around back in ancient Greece in various forms, including peer-to-peer lending, actually. And at various times over that period, it has sort of emerged, and it particularly comes forward when you have crises, political crises. So and where we are now with a sort of political crisis of democracy, that's not so different to the political crisis that created democracy in the first place, where you've got people who are acting like oligarchs or plutocrats or whatever you want to call them, or technocrats, taking control of things. People fight back and they look for alternative ways of using their money in order to do that. So I don't know if you saw, but I found it particularly significant that Italy, without even a comment, allowed a technocrat, Mario Draghi, to be prime minister, which is the equivalent of us saying to Mark Carney, "Well, now you've finished being Bank of England governor, do you think you could do a better job than Boris Johnson?" And effectively installing him.
That Mario Draghi, he's not actually elected then?
No.
Good grief. I didn't realize that. I thought,
no, he's a technocrat. It's possible in the Italian constitution, as long as everyone agrees, that the prime minister doesn't have to be an elected person.
I see. Not so in England?
I don't know about the rules between the House of Lords and the House of Commons. I don't know, is the honest answer. It's not written down, so it's just based on precedent. Normally, the prime minister comes from the Commons.
Right.
But I would put money on there not being a law written down that says that's the way it should work, because I mean it was a job created by Robert Walpole 300 years ago. So I mean he just made it up so that he had a little bit more power than the king.
fantastic British history. Yeah.
Well, it sort of goes back. That was when the national debt was created, you see. So it's all down to money. 1694, that's the beginning of the national debt. That's when the debt was decided by Parliament, not by the King. And that is around the time that we start having prime ministers.
That was after they had, after Cromwell and the interregnum, and they brought back his son, right? So he was a king.
So, well, it's after the Glorious Revolution, actually. It's William and Mary. So even later than that, 1694, yeah. Right,
okay. You're going into territory where I...
Well, there's an excellent book I recommend. There's a guy called, I'm going to forget his name, Nigel, not Slater. I'll have to send you the link.
Okay.
It's called The National Debt, and it's a professor in Oxford that just basically, because this is all written down in the Bank of England, what we owe each year, the accounts of the UK, and he dug into all the different stories behind it and what people used to invest in. So this, and I think, you know, within that, crowdfunding has existed before. The type of municipal bonds we're doing now, that was something that really got started in about 1870 odd. So
is this something that is now being thrown into question by modern monetary theory? Or am I
not really? I think modern monetary theory is more about how you understand the creation of money, to the process to occur. This is how I read it anyway. So it's saying that, you know, the thing that should make you think about creating money is you know, is money created effectively in the private sector, or is it created by the state through its spending? And modern monetary theory is that money is created in that way. How that money is then used, that's the question for your financial system that then sits alongside it. So I think modern monetary theory is much more about understanding the levers of change that you have as a state, whether they're fiscal or monetary, and it's kind of saying those two things are more linked than we treat them now. But from an investor perspective, you know, the development of new ways of government sort of raising finance or moving capital around, that's a different area. That's more about, so national savings, for example, we have record levels of national saving with the government right now.
Do we? That sounds like a great thing to have.
Well, yes, exactly, because I've said it's national savings. If I said that's the national debt, you know, that 200 billion of our national debt is ordinary people's money sat with the government in their bank account.
I see.
It sounds less good. Now, it's actually, you know, there's a theory that says it's a good thing if you're borrowing to do certain things. So if the government was investing heavily into green infrastructure, as we're doing as individuals, and that's what they say they're going to do, they're going to invest into green infrastructure over the next 10 years. They should borrow that money as cheaply as possible. And a good way of doing that is to borrow from your citizens, because we've got excess savings at the moment in the UK of about 180 billion, built up through the pandemic by people not going out and going to pubs. So
how does that compare with the I always thought that we were astoundingly bad at saving, and that there were...
The saving rate is a different thing. Yeah, well, we generally save, if you take an average across the population, yeah, our saving rate is low compared to, say, China or Germany. But that's because we have there's drivers for that, because we have a pension, a national, you know, we have a universal pension system, which China doesn't have. We have and we have a culture of putting our money in houses rather than putting our money in banks. So, but I think the savings that have been built up in the last year and a half relate to our not spending, which is a different type of excess, if you like. And that money is now sat there. And if we all went out tomorrow and bought goods just in shops, we'd have inflation very, very quickly.
Right.
If we went out and invested some of that in things like job creation through green infrastructure, the effect won't be inflationary. It will be more sustainable, and, you know, it will bring our growth back to where we were when we started this mess,
Okay,
but transforming the economy in the process, which would be a helpful thing.
so the pressure to reduce your carbon footprint and not go out and spend all this money is essentially going to be quite good.
Well, that would be a win-win if
Yeah.
we didn't burn carbon doing consumption that we've actually, yeah, okay, we need an element of socializing and good stuff in our lives, but if a proportion of that money actually now went into green infrastructure, that in my mind would be a win-win economically and environmentally, because we're giving people jobs that are good quality jobs in areas that have lost a lot of good quality jobs, so the north and the industrialized north, and those jobs are not contributing negatively to our carbon budget. They're making positive inroads into that carbon budget towards net zero. So it will be a shame if we miss this opportunity. Right now, there's an opportunity, as you said, it's an interregnum. We're in a state of uncertainty. This is a time to sort of establish with people some new rules of the game. And I think one of them is, rather than thinking of our money purely in terms of that savings rate, which is essentially money set aside, we should think of ourselves as our investment rate and money that is there for a purpose and therefore and is essentially then aligned with the future that we want to create. We don't really measure that very much, but if you look at productivity gains and sustainability investing, the UK is a little bit behind the curve on that, and so more of our money could go into the development of the green economy for sure.
I can see that's obviously a good thing to save money, but at the end of the day, especially for me, in my personal situation with so when I come to retire, I will have a state pension, which is about £8,000 a year. So basically nowhere near enough for me living in London with essentially not that good a life, not that great, fantastic a lifestyle. And then thinking about, well, no, I'm only going to save it up to a certain date, and then I'm going to start drawing it all down.
Right.
So
that's one way of thinking.
It's a cycle. So it's not always going to be good. It's going to be, so me spending my money that I've been saving for so long will then have a negative effect on it, or
well, you should spend it. I'm saying you should invest it. So you should be recycling that. So I think your savings pot is not a pile of cash that you're then going to spend. Your savings pot will be turned into a type of investment called an annuity. And there are various forms of those annuities around now. But annuities essentially are an insurance product. They will pay you a return for a fixed period of time or forever, or until you die, basically. And so what you're saving up for is to buy the best possible long-term income thing that you can buy. Now, personally, because we have a pension with abundance, I put all my pensions into the SIP product that we have. So yeah, my pension is being grown slowly by renewable energy, by whatever means. And at the end of it, if I press the button on my pension to say, okay, now I want to retire, and with five children, only three of whom so far have got through the university system, that will be a long way off.
Wow. Good luck, mate.
I will then want to put it into, and you have no freedom now, I'll then want to put it into investments that pay me a return to fund my retirement when I can no longer earn money through working. Right. Assuming that's what I'm going to do. So I think this is coming back to the anthropology. What I've found is that we've got this morality around saving. We think of money in terms of savings.
Yeah.
And arguably it comes from a working class roots of saving up to buy a house. Most people work their lives to buy their house at the end of their lives. That was how it used to work. And then mortgages came along and accelerated that process somewhat to actually owning a house. But we haven't moved the conversation on around money. And so your retirement is based on your investment capability, not your saving capability. So if you just do it through savings and just earn interest on savings as they are in a bank, you will have a poor retirement. If you invest that money, and the earlier you do it, I have friends who set up pensions for their children
That's forward thinking.
because the first 10 years, those earnings that you make in the first 10 years will compound for the next 50. So even a 10-year head start will, double the size of your pension pot over the next 50 years. And this is, it's the compounding effect of capitalism is the thing that is both feared and misunderstood. On the environmental side, this is why we're addicted to growth. But it's also how investment works. It's a challenge, I think, to navigate.
Yeah, totally. I mean, but you're talking to somebody who's already reached the point where those 10 years that I should have invested are way back behind me now.
Well, I'm the same. I'm a converted, not a preacher, if you see what I mean.
Okay.
So I learned too late. That's how it all works. Same as because I said it's what we all believe about money.
Yeah.
And suddenly you get your eyes opened by an experience and you think, well, actually it doesn't work that way. I wish I'd known that 10 years ago. But you can't wind the clock back. So then it's about saying, can we create products, right? So the investment products that you buy now when you retire, they're basically marketed by the insurance industry, and are there because the insurance industry has a particular type of liability in the future that they want to offset. And so the return that you get is quite low on those annuities now, because it's fixed by interest rates and the cost of money and things like that.
Are there green versions of these annuities? Can you get green annuities?
Not yet, except some of the products that we're now doing with councils are going to work and act a lot like annuities. They're going to be they're not as good on the risk basis, but they'll provide that slightly better return, but they will be green.
Right, okay.
So no, that's a whole market that needs to be opened up. But at the moment, those products are driven by the reason why people retiring now are getting such a poor deal on them is because the Bank of England interest rate is effectively zero.
Yeah.
And the government is borrowing for effectively zero. Therefore, your return on your annuity is not very good compared to inflation.
No.
So yeah, it's a challenge. It's a challenge. But it is an area that we've looked at for abundance. But it's a very hard one to sort of break into because it's such a regulated market.
Yeah, I bet. There was I'm just looking at the clock. I was just there were quite a few questions that I didn't manage to get.
I was just looking at those.
So loads of stuff that would be great to talk about still, but I kind of think it would be best to wrap up. But there's just one more question that I did want to ask. That sort of, do you have any personal tips that you can give for how can we best survive the future and all of these uncertainties and risks surrounding climate change and what's going to happen?
Yeah, I think it's easy to get blocked by that, isn't it? I think that because you look at everything that's happening and I think it's quite confusing because there's all these different technologies. There's a lot of investments now out there. There's a lot of funds and different products being offered. I think the core of it is not acting has a cost. So sort of the wait and see strategy is effectively a negative strategy now.
Mm-hmm.
Because the clock is running out, and it is a clock that's running down quite quickly. And so the next bit is like, well, how do you act? And I think you can get tied in not saying what is the most effective thing I can do. The most effective thing you can do is therefore to make a decision that sort of fits as best you can the financial needs that you've got. So for some people that will be to look at a fund type product. For others, if you've got money that you can afford a little bit of risk, then looking at crowdfunding makes sense. But I think it's about breaking it down. So my tip is don't look at your money as a single pot. Look at it as these are my different pots of money that I've got, even if those are individually quite small, and make the decision for each one of those depending on what your purpose is for that money. So if you can get that purpose sorted out, then some of the financial decisions are made for you, and then you can look at the outcomes in terms of their impact. And then I think, looking at an ethical bank like Triodos, that's a good start, because they are making decisions on their lending side which are better for the environment than other banks. I think then there's also looking at crowdfunding for the money that you want to take more risk with, but also to make more change with. I think if you're in that mindset, you want to create change. And then there's sort of a middle ground, which is for the money that you like saving for your retirement, where you want to get diversification as quickly as possible, and then you should look at a fund.
Right. Sage advice. Thank you very much.
Well, with the slight caveat that yes, it's not advice.
Okay, sage words.
But it would be my tip as someone that is also doing it. I feel more comfortable saying it because as abundance directors, we put our money where our mouth is. So we have a SIP and an ISA each. We invest in all the projects. If things go well, we benefit. If things go wrong, we're involved.
Brilliant.
So we see that as a personal responsibility.
Brilliant. It's been a great talk, and really interesting to talking about capitalism and society and the way things work and how it all fits together. It's been really good. Thank you very much.
Thank you. I enjoyed chatting.
So there you have it. That was Bruce Davis from Abundance Investments, where you can support various renewable energy projects from as little as £5. And if you have any cash extra, then you can support me if you head on over to patreon.com using the link on the carbonwatchdog.org website. And thank you very much for listening.